You are watching Market Watch, the brief overview of the key events from the world of finance. As strange as it may sound, everything indicates that the inflation report is much more important than the decision and subsequent comments by the head of the Federal Reserve, Jerome Powell. Recall that yesterday the inflation report for May was published, which surprised investors. After all, according to official data, the consumer price index turned out to be lower not only than the previous ones, but also the predicted values. Moreover, inflation has slowed down in a month-to-month and year-to-year ratio, which should increase the likelihood of a reduction in the key interest rate by the Federal Reserve. This is exactly the reaction of the market that followed. Key U.S. stock indexes have turned bright green, showing significant growth and, as a result, updating historical highs. On the opposite side of the market, we are seeing a weakening of the U.S. dollar paired with most currencies, which is also quite logical, given the unexpectedly stronger than previously expected slowdown in inflation. At this point, it is important to understand why the decline in inflation is a strong bullish fundamental factor for the stock market and bearish for the US dollar. Quite simply, the weakening of inflation increases the likelihood of a reduction in the Fed's key interest rate. Recall that at the end of 2023, analysts predicted at least 3 stages of monetary policy easing by the Federal Reserve in 2024. Towards the end of the first quarter, it became obvious that the consensus forecast could not account for more than 2 declines. And yesterday it became known that you should not count on more than 1 reduction in the key interest rate. This is the whole paradox, and despite the revision of the forecast from the Federal Reserve, investors have paid more attention to inflation data. But if we omit all the details, then we can state only one fact: the bulls on the stock market are ready to use any opportunity for another purchase. Shifting to the cryptocurrency market, we also note the general optimism, which was largely due to a clear improvement in the mood on the stock market. Pay attention to the growth rate of the technology sector, which in turn pushes Bitcoin, Ether, and other coins up. However, unlike stock indexes, cryptocurrencies are trading noticeably below historical highs, thereby indicating the weakness of buyers. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.